Today just goes to show you how disconnected the markets are from reality. Holy moly guacamole. Crazy things taking place in DC. As you already know, I'm not going to dive too much into that. There was a lot of news and headlines around if the Democrats won the Senate, there will be consequences in the markets. Meaning that, the prospects of higher taxes could impede on equities. Well, I mean, look what happened today. Yield shot up. The market shot up. Everything shot up, it felt like. We're going to be getting into the charts, and then I'm going to be kind of breaking down today ways to interpret what's going on specifically right now. And there's two ways you can look at it. I'll give you the heads up. You can be looking at these as now breakouts to move to all-time highs and continue to move to all-time highs. And then we also have the possibility for blow-off tops / overthrows / melt-ups, you name it. But I'm going to break down both case scenarios for you, okay? Because it's important to look at this and respect the market's momentum as you create new trading plans, as you buy certain investments and so forth. So let's go ahead and get right into the show. Ladies and gentlemen, welcome back. My name is Michael Silva. Once again, smash that like button. Hallelujah, hallelujah, hallelujah. I don't know what's going on right now. All right. First off, let's just start off with the market dashboard. We're looking at the sectors right here in the S&P 500. Okay, these are the spiders. What's at the top of the list? Financials. Why would financials be doing so well? More specifically, what's doing so well within financials? Well, the banks. Okay, this is the regional banking index, up 7.84%. A huge move in the banking sector. Why? Why would banks be doing good right now? Well, we've been talking about this. If yields go up, that's good for banks. Why? Because they borrow short-term, i.e. customer deposits, and they lend long-term, i.e. mortgages, right? So the higher the rates go, it's the more margin that the banks can make. So what do we got going on in here? Well, we've been trending sideways, and I felt like there was going to be some sort of spike. I didn't know which way in either direction, as we stated yesterday, but it moved to the upside. We broke past 1%. Okay? It's a pretty aggressive move, up 6.47%. What are the implications of all of this? Is it just kind of a overshot right here, until things settle down, until we have some clarity of what's going on with all this political craziness? Well, first off, let me just show you this. Okay, yeah, these are the curves are steepening. We're above the 1.04. Pay attention to the 10-year, because if I scope out, dating back to the 60s, look at it broke down this last year in early 2020, and this is where it's kind of coming back up to. It's not far away from retesting this long-term trend line. Notice we broke here. Okay, we got above it. This is the first testing point. 2, 3, and it came down somewhat close. 4, 5, little overthrow. 6, and now we broke down aggressively when we broke down through it. This is a bear channel. So you gotta wonder, did we just get an overthrow to this bear channel and we'll come back up and then come all the way back up to 2%? Maybe, but what would that mean for equities? It's something to consider. Bonds, we were tracking this trend going up. The RSI was strengthening. Things were looking good. Overall context was bearish. We pointed out the higher volume of selling yesterday, which was kind of odd. And then boom, where did we wake up today? At the bottom range of the channel. It was a full red candle when I notified it on Twitter. By the end of the day, we clawed back just a little bit. It looks like a tiny little hammer candle like it did right here. So perhaps maybe it was an overthrow in yields, and maybe we'll start climbing itself back up here in bonds. I don't know yet. We need more information. We need more clarity. All right, let's go back to the sectors. What else is doing really good? Materials. Now, if you follow me on Twitter, I was talking about materials in late December, talking about the ascending triangle. Okay, this looked like a solid setup. I said it. Materials looking good so far. That was December 30th. Then we started to get a little bit of a breakout here. Okay, it was kind of choppy breakout, but good volume, which was nice. The MACD was bullish. It was crossing over, which was nice. And then what happened today? Shakyu, ba-boom, shkagoom. It shot up like a rocket. Nice move for materials. It's important to look at the sectors and the relative strength. If you're wondering how I saw this or knew this, well, it's a basic technical pattern, and you just need to look at the relative strength, which maybe I'll make a movie about a sector analysis, and we'll just do some relative strength analysis to make it pretty simple. But clearly, Bollinger Bands, or not Bollinger Bands, actually Bollinger Bands, they were tightly contracted right here, right? And really what I've been saying throughout these last week or so was when Bollinger Bands get tightly contracted, it foreshadows aggressive moves, and it could be in either direction. And this way, on this Bollinger Band squeeze, it broke above the resistance here, and then you could see that's one of the squeeze kind of trading strategies out there. Let's look at indices, okay, and now I'm going to talk about the ways to interpret, okay? There's ways to interpret what's going on right now in the markets, okay? First way to interpret is by looking at the potential for these being breakouts for the start of an even bigger move, okay? A lot of people believe that the market will be extremely bullish despite everything that's going on in the economy right now, which, by the way, it's not doing great. By any means, by any measure, it's not doing good. And that's largely in part due to the pandemic. All right. And we have the Federal Reserve pretty much backstopping anything. Okay. If you ever look at a junk bond chart, it's quite impressive of how much it mirrors the S&P 500. But now I'm getting off track. We can play it as breakouts. What do I mean by that? Well, first off, on the monthly time frame for the NYSE, notice how we're kind of peeking our head above this. Now, this is monthly time frame. We have more to go, but this is the start of a long-term trend line that's resistance being broken. Okay? Yes, negative divergence building right here, but that doesn't necessarily mean that's going to stay a negative divergence. And yes, it's been an aggressive move, but we've never been, in an environment like this ever before. I mean, some people could say 2000, right, where we had that massive tech bubble. But who knows? I mean, this time is different. Everyone says this time is different, this time is different. And when everyone really actually believes that this time is different, that's when all the money gets sucked in and bad things take place. So you got to be very careful, but you can also respect the momentum and play breakouts. All right. So we're breaking out of these patterns, and sometimes these get pretty big overthrows. Okay, when we break it down more closely into the daily time frame, look at today's price action. Okay, if you look at this as consolidation, and yeah, the first trading day of the year, talk about a whirlwind. It came and touched down all the way pretty much back to mid-December, one of mid-December's candle here, or you can just look at basically the December, open for the NYSE. So pretty aggressive. Now we have the MACD crossing over right here. This is a bullish looking crossover. We had the Bollinger Bands tightly contracted. We've been saying that it's due for a big move or a squeeze of some sort. And now you can see the Bollinger Bands kind of contracting, or not contracting. They were contracting. Now they're expanding here. All right. So this could be the start of a potential move higher. That's how we can interpret it. The IWM, this is the monthly time frame. We've been showing this long-term resistance dating back to 2001. You can see respected, and now is saying the heck with that. We're going above it, even though that we're shot this far. What's a reading? 21. Okay, 21% above the 10-period moving average on the monthly time frame. It's a huge overextension. That's the PPO oscillator. The PPO, and then I just changed the settings. So this could be interpreted as a breakout move to create this resistance as now support. Now, first off, this is the monthly time frame, so the monthly hasn't come to an end yet, but it's always a possibility. And the IWM, the Russell 2000, has been on this relentless vertical move. Maybe it continues, right? Okay, when we zoom in on the daily time frame, you could consider this, okay, maybe it's consolidating here, right? Maybe that was consolidation. You have the MACD crossing up, potentially crossing over, a little negative divergence, but who cares, right? Who cares? The market right now is ramping up higher. The small caps specifically up 4% for the day. Crazy day. So this could be a potential move, a breakout move to make continuously new highs. Now, I'd be very careful and always make sure you have your stop losses. Don't ignore that the market could turn around in a hurry. Remember, and you got to remember this listen clearly. Stocks and indices, equities, take the stairs up and they take the elevator down. So yes, this has been a vertical move to the upside, but we haven't seen what an elevator down looks like with moves like this. I mean, we've seen it, throughout history when you look at certain crashes and stuff like that, but take this into consideration that this could be a potential breakout move, and we're going to continue to build more momentum on this. A lot of panic buying taking place right now, pushing the market to all-time highs. Not to mention, which I did not mention already, is when we break above resistance, especially long-term trends like so, it's going to force the shorts to cover. So when the shorts have to cover, that means they have to buy back. So if they're buying back, and then you have momentum investors buying back, and then you have other panic buyers buying in, it creates even more euphoria to drive prices even higher. You got the Dow Jones. Also, this resistance has been well respected. We closed above it today. All right, maybe that's the start of something. You have the PPO oscillator kind of crossing up here. Bollinger Bands have been very, very, very contracted, and you see a little uptick here. Is it a head fake or is it not? I don't know yet. Hindsight will tell us the truth, but they've been super contracted. We closed above a resistance, and you can see the Bollinger Bands now spreading. Remember, contracted Bollinger Bands foreshadow pretty aggressive moves, and this could potentially be a move like so. Industrials on the monthly time frame. All right, we broke out. This could be the back test month candle. Okay, we broke out of resistance, then becomes support. What if this is the breakout movement where now the Dow Jones is going to start its whole new rally, whole new leg, and kind of just ignore 2020? If you just cover your hand through, 2020 and just erase that year, it would look pretty boring, right? That means we would just have, a couple candles and kind of drifting up slowly to connect it. But holy moly, talk about a very crazy 2020 year. And I'll just throw in the NDX here. The NDX, it's not doing relatively good as of right now when you're looking in comparison to the other indices. Why could that potentially be? Well, the only reason I can really think of is there's a lot of political headwind for these big tech companies. That's my only guess. And, if the Dems do control everything, maybe that's potentially bad for the NASDAQ, the big tech companies. Maybe. I don't know. But today we gapped down, but we had this relentless bid higher, and then we kind of ran into this resistance here. But still, it's holding key levels of support. So we'll see how this goes. Maybe this is just a breakdown of the rising wedge, then a back test, and maybe it's going to take a breather before its next move. I've been saying that the MFI, the symmetrical triangle in the MFI, did not support the breakout here. So, the price action kept continuing to drift higher, and the MFI was just kind of flat. Still above 50, so that's good, but we just got to, pay very close attention to it. Okay, so you can interpret this as all breakout moves, and you can play the momentum into breakouts. That's not bad to do, especially in short-term investing. Longer term, you want to be, a little bit more careful and make sure you have key levels mapped out. The next way to kind of interpret this is by looking at the weekly time frames that I'm starting to notice are creating topping candles. What's a topping candle? Well, I'm talking about a hangman type candle, and these can result in, potentially that final blow off move. It always needs confirmation, so that's not making a prediction. It's just reading the chart for what it is. Okay, let's look at weekly time frames. Dow Jones Industrials. By the way, I posted this stuff and I talked about it on my website on today's market update as well. So I'll just clarify, the thoughts while we're going through this. But yes, weekly candle. I want you to pay attention to how wide the range is. Okay, the week's not even over yet. And look at the range of the candle and the range is basically the low and the high. Okay, that's measuring the range, small body. Okay, right up here, and then the long lower wick. That's a hammer candle. But the range, notice how the range of this pretty much engulfs, 1, 2, 3, 4 weeks. What does that tell you? It means if the range is really big, it means that there's more volatility taking place. So if there's more volatility taking place, the market is really trying to tell us right now, it's deciding what to do. Is it going to be going down and then the bulls step way back in, and we need confirmation on the following weeks to come. But the volatility in the markets has not settled down by any means, which also lets me know that anything can still really happen. All right, so the rising wedge pattern, we broke above it. That's part of the whole breakout mentality. Now, on the other flip side, looking at it as a topping candle, okay, the week's not over, so this candle's still not fully formed yet. If this is a hanging man candles can be reversal type candles, especially when you get, obviously, big aggressive moves to the upside and then this type of formation. All right, so what do we need to pay attention to following weeks? Well, we need confirmation. So if we start closing below 30,000, that can be a cause for concern for the Dow. So if you're going long here, on specific stocks or the IWM, or not the IWM, sorry, the DIA, or just, futures or whatever, make sure you're paying attention to this level. Why would you want to pay attention to 30,000? Well, resistance, then support right here too as well, okay? So 30,000 would be a key level, and this main candle touched down on 30,000. What happens if the price action starts getting below 30,000? Well, guess what? Stop losses could be down there. So if stop losses have to get triggered, that means selling increases. And if we get confirmation, of a breakdown, we can have more selling pressure continue to progress. It's the same thing as a blow off top when shorts have to cover, and then momentum buyers also buy into it, and then euphoric, panic buyers are buying in because they want to make sure that they get in. The same could happen to the downside, okay? It goes both ways. Okay, here's the NYSE hanging man candle as well. I'm not going to get way into it, but look at the support where it kind of bounced from. So we're going to have to keep an eye on 14,250. Now the week's not over, okay? So it might not look like this by week's end, but even if it finished with the small little doji type, body, that's still signaling stuff to us, meaning that, momentum to the upside could potentially be slowing. We just need confirmation. All right. And not necessarily momentum because the range was extremely long, but it could potentially mean that more selling pressure is starting to move in, which when you have a long upper wick like this, for example, it was one big green bull candle at this specific week, and then the bears really stepped in and closed down here. So it's showing the possibility for reversal, but like you need confirmation to close down below that. Okay, here's the S&P 500 hanging man candle, also wide range, engulfing some of these candles. The range of the candle is engulfing them. So this could be a hanging man topping type candle too, with what? With confirmation. So where would we have to get below? 36.50. Okay, you would need a weekly close below 36.50. And look at the low of this candle this week, which is basically the first week of the trading year. The low of the candle tapped this candle's high here in early November. Okay, so just a huge range for, the start of a week. The week's not even over yet. It's crazy. And then you got the IWM. You can go back and forth if this is the hanging man candle, but really it has pretty bullish, larger type body, and then it has a large lower wick too, pretty much mimicking the two. So we'll see how this one closes up, but what I will note is it's at the top of its trend line right here. RSI overbought, MFI overbought. It's not the greatest place to go long. However, you can get overthrows. Yeah, you can get just blow-offs, and you can get continued steam and momentum, but the unfortunate thing is they can be they're called bull traps, right? They trap in bulls on the way up, and then boom, you get hit to the downside, which once we get into gold, that might be a bull trap itself right now, depending on where it plays out these next couple of days. Let's go over indicators. Indicators very quickly. VIX was crushed today. But then all of a sudden, all this crazy stuff going on in DC, boom, shot it right back up to above 25. This is a hammer candle, which would indicate to me, maybe the VIX isn't ready to start getting crushed to the downside here. And that also signals more volatility come. I posted on Twitter the 2-hour time frame. It's kind of a cupping type pattern. You can see the RSI is just higher lows building over here. This all looks like it can just really rip to the upside. And look at these just big swings since late December. Just huge moves back and forth. So much uncertainty going on in the markets. Here's the sell signal that I use, CPC. Still haven't crossed above the red line. Once we do, I'll let you know. I laughed at this chart just because the breadth was at 3.67. I was expecting to see a lot more breadth on this today just because of how much stocks moved. But it is what it is. Like the NYSE had a huge move today, right? So the Let me bring up the NYSE. Where is it? Where is it? Let me see if I can bring it back up. No. No. Come on, where are you at, NYSE? All right, so this is the NYA, the NYSE composite. It was a huge day. It was a big breakout moment. So when I'm pulling up the NYMO, which is, where's the NYMO? There it is. So the NYMO, which is the NYSE McClellan oscillator, I was expecting to see more breadth. And yeah, I mean, it was coming from a low point, so I guess you can make that argument. But, you know, to make these, you know, aggressive moves and you still see the breadth kind of just plopping down, you know, and you had big breadth up here on market highs. It's just, I don't know. It's just funny to me. It's just funny. Let's look at a couple indicators that I used on the Michael Guyad interview that he created with his award-winning research paper. I was talking about the positive divergence in utilities, okay? The XLU over the SPY is something to consider because it's been basing out. And we saw utilities catch a bid today. The rate of change, 4 weeks, it hasn't crossed above zero. Really, you just want to look at this once a week. You want to look at the week when it closes, because then that's the next week when you go either on a risk-on environment or a risk-off environment, okay? Risk off or risk on. Okay, lumber to gold shooting like a skyrocket up. Okay, we had a video yesterday that I posted about watching lumber and watching gold, and I showed this chart. Okay, the IWM did not break down through this resistance. We caught this relentless bid up. What do you know? What's lumber doing? It's catching a bid back up. This is a pretty bullish looking type candle. This could have been a little, you know, bear trap right here. And now the lumber might take off. Like I said already in the interview though, or not in the interview, in the video, this is too short term to really determine anything, but it's still something important to note and something important to watch. So we got to see how this plays out. But remember, if this was the peak and we do consider, yeah, maybe go up a little bit more, but continue to move down, you know, I think that that's not going to play out well for the IWM in the very near future. Let's look at the dollar, and then we'll get into gold and silver because that's going to be important. Falling wedge, it's still relentlessly getting just dragging down. Blah. It's falling down. However, look at the little uptick here in the RSI, positive divergence. MACD still positive divergence. I don't know. Something's like saying like, okay, we might need to pay a little bit more closer attention to the dollar. Because if the dollar starts moving here and the move continues down with gold, the dollar is an important chart to watch. It could be squeezing higher. And, you know, sometimes when that takes place, it could be a really strong aggressive move, which would signal a flight to safety, the reserve currency of the world being that flight to safety. But we don't know yet, right? Falling wedge pattern on the weekly time frame, positive divergence, and it's still holding within the pattern and within this kind of support zone. Oh, man. Commodities, gold. This is what I want to point out. I pointed this out on Twitter. This right here looks very similar to how it did here. Once we got below that candle, this one wasn't as aggressive of the selling day, but that's okay. It might still move. This day, it closed below the 50, and then we had a little bit of an uptick, but then continued moving down. This pink box, I never removed it, but that was where I ended up buying more gold. That was my target area from probably way back over here. I bought more gold right down to this range. And now what we're seeing is this resistance that we drew out, you know, which could be the neckline for a really big move, 1960, got rejected just spot on perfectly. RSI was overbought. We're seeing the downtick. Look at, we're still holding the trend line. So there's a couple things to consider here. This could just be a move up and then a back test. The dollar scares me a little bit right now, but we'll see. I'm still long-term view is really bullish on gold, so I could care less about these down days. I actually encourage days like this just because it allows me to buy more gold for less dollars. All right. And then we also said a few videos ago that maybe, you know, the 200 period sloping aggressively up here where, you know, some bullish context, but the 50 is kind of getting close to it, which what if that means that a death cross is coming? I don't know too certain, but the blue line, which is the 50 period SMA, should trend up if the price action continues, right, to stay above it. But we'll see what the price action does. So yeah, we have the 50 period as support, the 200 is support, the breakout area is support, and we have this 1960 right here as a main level of resistance. You have the stochastics, full stochastics still in overbought territory. That can remain overbought for a long time, as you've seen here and through many other videos. Silver, look at another tag perfectly at that 28. We had a high of $28.10, rejected from that area, close significantly lower, reversal type looking pattern here. Maybe we might pull back a little bit, take a little breather before it heads higher, or maybe this is a shift changing. The price percent oscillator is still sloping up, but we have a little down tick right here above zero. So things are still good at this particular point in time. But like I said, the dollar is kind of got me kind of curious as to what's going on. Let's go ahead and wrap up the conclusion section. Look at, there's still all this political headwind stuff going on. All right. So what does that tell us? Well, it tells us that we just need to be very careful in these environments. You can look at this market as breaking out and play the momentum to the upside with either short-term or long-term, which just, be careful with the long-term because who knows what could potentially happen. So you just got to monitor it more closely. Or you can play it potentially, wait for the confirmation for breakdowns of these hanging man candles. As it stands right now, you would want to play more on the breakout side of things. And if you were to head short or go short in a risk-on environment, you need to do it when the price action is at extreme levels. So for example, on Twitter today, I posted, hey, 30-minute time frames, and then I put each one of the indices that I was looking at are super overextended. And then all of a sudden, kind of things broke loose, and then we started seeing some really aggressive moves to the downside. But shortly thereafter, I noticed that there were forming hammer candles, which means people were buying the dip. All right? So a lot of back and forth momentum. You have to play it very tactfully here. Okay? And in order to do that, you need to be just well aware. And if you don't want to be well aware, you can always just, which I've done because the market is moving so aggressively, I remove the amount of capital from play and I play with smaller amounts and I widen my stop losses. This will allow me to capture still really decent gains, but not risk that same amount of money. All right, it's a very simple strategy. And then when things get really overextended in either the long or the short direction, I can place a more aggressive hedge. It's really that simple. All right, that's all I got for you on today's episode.